Right. So the problem on the ledger, we are practicing ledger. So this is a small problem given. Okay. On 1st April 2018, Mohit started business with a capital of 50,000. He made the following transactions. On April 3rd, purchased goods from Rita on credit for 20,000. On April 4th, cash paid to Rita 10,000. On April 6th, goods sold to Rohit 25,000. On April 8th, received cash from Rohit 20,000. On April 12th, goods purchased from Rita 12,000. On April 18th, cash paid to Rita 20,000. On April 25th, goods sold to Rohit 10,000. On April 30th, received cash from Rohit 6,000. This is the problem with the transactions. Totally how many transactions? 1, 2, 3, 4, 5, 6, 7, 8. With capital of 50,009. Okay. Now, what's the question? What you're asked to do, you are required to journalize the above transactions and show the respective ledger accounts. In our first part of discussion, we have done journalizing process. And now we are doing ledger accounts. We are doing posting. We are practicing how to post in the ledger accounts. What you're journalizing, you're posting into ledger accounts. Okay. Now he's asking both journalizing as well as ledger. Right? Now, look at this. Mohit started business with a capital of 50,000. When he pumps in capital into the business, what happens? Cash comes in. Cash to the tune of 50,000 comes in. What is cash? An asset. Debit what comes in is to be applied to cash because cash is an asset. All the asset related accounts are real accounts. So the rule for real account is debit what comes in. Debit what comes in. So on April 1st, cash account debit. Okay, how the cash is coming? It's coming in the form of capital account. What is capital? Capital is a personal account. Who is the person here? Mohit is a person. Okay, it's Mohit's capital account. So Mohit is giving, therefore his account is credited. Okay, it's Mohit's capital account or simply capital account. So this is a personal account which is credited. Okay, credit the giver is applied. So 50,000 and 50,000. Okay, in the debit column and credit column respectively. Now let's come to the third. Purchase goods from Rita on credit for 20,000. If it had been for cash, we would have written cash account. Okay, but here for 20,000, for 20,000, Rita is given and there's no cash mentioned here. It is implied that it is for credit, and moreover, the word credit is given. If the credit is not given, if it is simply for 20,000, then you have to understand that is for credit, not for cash. And here the wording credit is specifically given, and there's no, there's no confusion. Okay, so let's come. Purchase goods. When you're purchasing goods, goods come in, or purchases. Okay, purchases account, or purchase of goods account, or simply goods account debit to who is giving that goods? Rita is giving that goods. If you're paying cash for that good, those goods, you will write, or you would have written to cash, but you are not paying any cash. So therefore you have to pay some amount. What is that amount? 20,000 you have to pay to Rita. So as long as you have not paid and you have to pay in future, you need to remember the name of those people or those accounts, because you have to pay in future. It's an obligation pending, right? So purchases account debit to Rita's account. 20,000 in the debit column, 20,000 in the credit column. Because it is debited with 20,000 to purchases account, it is credited to Rita's account with 20,000. Okay, that's on April 3rd. Come to April 4th. Cash paid to Rita. Cash paid to Rita. When cash is paid by the company, cash goes out. Cash goes out. Okay. Credit what goes out. Credit when it goes out. Credit what goes out. Cash is going out. It has to be credited. Debit the receiver who is receiving. It is Rita who is receiving this cash. So debit Rita. Let's come to it. Yeah, Rita's account debit to cash account. Rita is receiving, debit the receiver, cash is going out of the company, and it is credited. Okay, so it is debited with 10,000 to Rita's account. It is credited with the 10,000 to cash account. Okay, that's done. It is all about 4th April. Now, let's come to April 6th. Goods sold to Rohit. Goods sold to Rohit 25,000. Okay, now when you're selling goods, okay, goods are going out, or it is simply sales. Okay, now who is taking? Rohit is taking. Now, had it been Rohit for cash, if it had been returned, then you would write cash account debit to sales account. There is no cash mentioned here. Goods sold to Rohit. It's simply given goods sold to Rohit. That means Rohit is purchasing goods from us, or we are selling goods to Rohit on credit. Okay, Rohit is the receiver, debit his account, and sales is to be credited. Look at this. Rohit account debit 25,000 in the debit column to sales account, credit in sales account. Okay, 25,000.
Sir,
Yes.
sir, I just wanted to ask, when you're selling goods to Rohit, we
Yeah.
can write Rohit accounts debit to goods account also, no, sir?
Yeah, goods account. But the general practice is that is not wrong, but general practice is sales account. It is
So,
sales. Yeah.
the doubt I have is when we do purchase account debit to sales account, we
Yes.
don't have done purchase account, right? Even on
Now, this is also goods. April 3rd, this is also goods. Okay.
ledger,
So
right?
here we are writing purchases. And when we are writing purchases here, let us better write sales so that it is uniform, it is consistent in our convention or practice. Okay. So
So in ledger entries, we need to do different ledger entries, sir, for this both.
ledger we're coming. I'll show you the ledger. Okay. Yeah. I'll show you
Okay.
the ledger. Okay. Now, where are we? Where are we? Where did we stop? Sixth? Yeah,
No.
growth to sales, 25,000. Now, on April 8th, received cash from Rohit. Okay, cash is received. Cash comes in. Debit what comes in. Okay, who is giving that? Rohit is giving. Credit the giver. Credit the giver. Come to 8. Cash account debit to Rohit. 20,000, 20,000. Okay, now let's come to 12th. Goods purchased from Rita. Again, goods purchased from Rita. Purchases to Rita. Actually, as per Sabrina, it would have been uh, goods to Rita. But we are writing here purchases account debit to Rita. You know, the practice is, yeah, the practice is to use the words purchases only. Okay, majority people write purchase. Actually, it is purchase of goods account. The full sentence is purchase of goods account. So instead of writing that lengthy one, you can simply write purchases. It is sale of goods account. Okay. Instead of writing such a lengthy sentence, you can write sales account. Okay. Now, purchase account debit 12,000 in the debit column to Rita's account 12,000 in the credit column. That's 12th April. Now, 18th April, cash paid to Rita. When cash is paid, cash is going out. Cash is going out. Okay? Cash is going out. When cash is going out, it has to be credited. Who is taking that cash? Rita is taking that cash. Okay? So, yeah, 18th. Rita's account debit. Rita is the receiver. Debit the receiver. Cash is going out. Credit what goes out. Okay, the amount 20,000 and 20,000 in the debit and credit columns respectively. 25th, goods sold to Rohit 10,000. Okay, Rohit is receiving goods. Rohit's account debit to sales account. Had it been for cash, it would have been cash account debit to sales. But now we have to remember Rohit because we have to collect money from Rohit. So Rohit account debit to sales 10,000 and 10,000. Okay, next. April 30, the last one, received cash from Rohit, 6,000, 6,000. Okay, cash is coming in when you receive debit 6,000 to Rohit, who is the giving. Okay, credit the giver. That's the end of passing journal entries. You have completed, okay, the journal, right, for all the transactions. Now, from this journal, okay, we had to open the accounts individually. You have to open cash account, you have to open capital account, purchases account, readers account, okay, and sales account, and Rohit's account, and and I think that's it. That's it. Okay, let's begin with the cash account. Cash account. Now, the T form of the cash has two sides, right? The debit side, the credit side. The debit has 4 columns, the credit has 4 columns. What are the column headings? Date, particulars, journal folio, and the amount. Do the same for credit side also. Date, particulars, journal folio, and the amount. So 4 columns. Okay, this is what? Date, particulars, journal folio, amount. Date, particulars, journal folio, amount. And what is journal folio? It's a page number. This particular transaction is recorded in the journal. You know, for us, the transactions are very less and it came in just 1 pages. But if it is lengthy problem, or, you know, in a business organization, you know, hardly we have, you know, 8, 1, 2, 3, 4, like that, 8 to 10. But in an organization, it will be hundreds and thousands of transactions, and it extends to so many pages. Okay, that's a page number. That's a page number where that particular transaction is recorded, right? So on April 1st, look at this. On April 1st, cash account debit to capital account 50,000. Okay, cash account debit to capital account 50,000. 50,000, right? Now, what you have to do is when you open the cash account, surf through the entire journal where you can find the word or the term cash. Here there's a cash, there's no cash in the next, and there's a cash in the third one. Okay, reader's account debit to cash account 10,000. Okay, cash account is credited. Cash account is credited. Cash account is credited with reader's account by writing by reader's account 10,000. Okay, the entry is like this: reader's account debit to cash account.
Credit, sir.
Now, reader's account debit to cash account. In cash account, it is credited. The journal entry is reader's account debit to cash account. Okay, in cash account, it is credited with reader by reader account 10,000. Okay, right? Now, let's come to the next. There's cash here on 4th also. Okay, again, yeah, 4th we have completed, no?
8.
8 cash account debit to Rohit 20,000. Okay.
Account.
Yeah, cash account debit to Rohit 20,000 on 8. And yeah, there's no cash here. There's no cash here. There's no cash.
Sir, 18.
Yeah, 18. This cash here. Okay, reader's account debit to cash account. That means in cash account it is credited. Okay, this amount is credited. Okay, with 20,000 by reader. Okay, by reader 20,000. Actually, the entry you have seen is reader's account debit to cash account. Once again, reader's account debit to cash account. Okay, in cash account, you're crediting by writing by reader's account 20,000. 20,000. Okay, now let's come back. 18th is over. 25th, there's no cash. 30th, there's cash. Cash account debit 6,000 to Rohit account 6,000. Okay, cash account debit to Rohit cash account debit to Rohit's account, 6,000. Okay. Now the total of the debit side is 50 plus 20, 70 plus 6, 76,000. Whereas the total of the credit side is 10,000 plus 20,000, 30,000. Okay. 30,000 is the total. And don't ask me, sir, what about this 46,000? 46,000 is what you are writing. You're putting there to make both the totals equal, both debit and credit side totals equal. It is the amount that you are writing. This is the amount that you are writing. Okay, to make both debit and credit totals equal. That's called balancing. Therefore, it is balancing figure. 46,000 is a balancing figure. And against that, you're writing by balance carried down. By balance carried down. Okay. Now, this balance carried down is the closing balance. Closing balance. When it is closing balance, we put the last day of that accounting period. Whether it is mentioned or not, it is implied that it is the last day of that accounting period. Okay. So April 30th, we write and write here by balance carried down and bring that closing balance. What is closing for this accounting period is opening for the next accounting period. What was closing for the last year will become opening for this year. Okay. Okay. Look at this one. There's a rice stock in your home, right? And when you're buying the rice stock for the next month, what is that you check? You check what is the quantity of rice left over in the family for this month on 30th, right? When you're buying on 1st of next month, okay, what is left over? What is left over and the last day of the previous month will become opening stock, opening balance, opening balance. Okay, therefore you bring that here. Look at this. On May 1st, the beginning of the next accounting period, you're writing here. And right here, to balance brought down, 46,000. 46,000 is the to balance brought down, and you don't underline it, just leave it like that. Okay. Now, if you see this is a bold line, it is implied that it's twin line. You are underlining these totals, but here you're not underlining. Okay. You have to just leave it like that. And this is cash account. Now, the next thing is, next account is capital account. Capital account. Let's open capital account. Right. Yeah, capital account. And same columns, 4 columns on the debit side, 4 columns on the credit side. And you will find only one item, right? Look at this. Cash account debit to capital account, 50,000. When it comes to capital account, the entry is reversed by writing on 1st April, the same date you bring here and drop, and you're writing in the particulars by cash. In cash account, you're writing to capital. In capital account, you're writing by cash. You have to take opposite. Okay. Now the amount is 50,000. Is there any amount on the debit side? Nothing. It's 0. The total of the credit side is 50,000. The total of debit side is 0. So therefore, to make the totals equal, you will write 50,000 here. You will write 50,000 here. What is that? That's a balancing figure. That is the closing balance on the last day of that accounting period. Okay, what is closing balance on the last day of that accounting period will become opening balance on the first day of the next accounting period. And here you write by balance brought down 50,000. 50,000. Yes, please. Somebody is asking some question. No question? Okay. Next. Yeah. So we have done with cash account and capital account. Next is purchases. So take this account and surf through your entire journal, wherever you can find purchase. This is one purchase on April 3rd. Okay.
April 12th.
April 12th, there's another purchase. And
That's it, sir.
That's it. Okay. April 3rd, 20th, 20,000. April 12th, 12,000. Whom did we sell? To Rita. Both are to Rita. Yes.
Data.
Come to purchases account. Purchases account. Yeah. What is that we see here? The journal entry. Purchase account debit to Rita. Purchase account debit. Purchases account debit to Rita. 20,000 on April 3rd. Purchase account debit to Rita. 12,000 on April 12th. That's it. There are no items anymore. So what's the total? 32,000 is the total on the debit side. 32,000 is the total on the debit side. Do you see any credit side items? There's nothing. It's zero. It's zero. So to make the total of debit and credit equal, okay, we put the difference amount. The difference is 32,000, as there is no amount at all on the credit side. So 32,000 we write, and against that we write by balance carried down, and we write April 30, the last working day, last accounting period day, okay, and bring that to the next accounting period. On the first day of the next accounting period, write to balance brought down 32,000, 32,000. Okay, that's it. Purchase account is closed. Next, purchase is over. Rita is another account. Okay, Rita is another account. Let's come to Rita. Let's open Rita's account. Yeah, Rita's account. Okay, and where do you find Rita? Yeah, wherever you find Rita, please mark it. Please mark it. You know, had we been in the class, you know, what we do is generally with the pencil, we just stick these items one by one so that we understand that we have completed that particular transaction. Okay, in the journal, we tick with pencil. Okay, so that it is easy to remember. And we are not doing that. Right. So Rita, there's Rita here on April 3rd. There's Rita on 4th. Okay. There's Rita on 4th. And there's Rita on 18th. Okay. Anything else? Anywhere else? Yeah. Rita on 3rd. Purchases account debit to Rita. Purchase account debit to Rita. In Rita's account, buy purchases. You're writing buy purchases. Actually, it is purchases account debit to Rita. Purchases account debit to Rita. Okay, in Rita's account, it is written buy purchase 20,000. And you know, we bought from Rita on 3rd April and also on 12th April. Again, we write on 12th buy purchases account 12,000 is the amount. Okay, and this is on 3rd and 12th. Is there any situation where we have yeah, Rita's, yeah, look at this on April 4th. Rita's account debit to cash. What is that? We paid cash to Rita. We paid cash to Rita. Okay, look at this. Cash account, Rita's account debit to cash. Rita's account debit to cash. So from here you can take Rita's account. Rita's account debit to cash on April 4th, 10,000. Rita's account debit to cash on April 18th, 20,000. 20,000. Okay, 20,000. Now, what is the total of credit side? The credit side total is 20,000 plus 12,000, 32,000. 32,000. Whereas the total of debit side is 10 plus 20, 30,000. There's a difference of 2,000. And fill that gap. You are putting this 2,000. It is not given. You are writing that so that both the totals are equal. What is the practice generally? The highest total is written on both the sides, both debit and credit. The highest total belong to credit side. So the lowest total is 30,000 on the debit side. There's a gap of 2,000. That 2,000 is written here, and against that you're writing to balance carried down. And the date to be written is the last day of the accounting period. That is April 30th. Okay, to balance carried down 2000. And what was closing? What was closing on the last day will become opening on the next accounting period. Okay, so the next accounting period first day is May 1st, and by balance brought down 2000. By balance brought down 2000. Okay, next is, Rita is over, cash is over. Okay, cash is over, Rita is over. What else? Sales. Sales account. Sales account. Let's open sales account. Okay, sales account. So sales account, right? Let's look at the sales. Wherever you find sales, check it. This is sales. Rohit's account debit to sales. Rohit's account debit to sales. Okay, sales account is credited with Rohit. And anywhere else? On 25th, Rohit's account debit to sales. Again, sales account is credited with Rohit. Right? That's it. Sales account is credited with Rohit's account, 25,000 and 10,000 respectively on April 6th and 25th. Okay, the total is 35,000. There's nothing on the debit side, it is zero. So to make it equal, we put 35,000 here. Okay, where zero appears. Against that, we write to balance carried down and put the last day of the accounting period. Okay, now this is a closing balance. What was closing last year will become opening next year. Okay, so 35,000 here. Right. Next, Rohit's account. Rohit. Rohit. You find here one Rohit. You find here one Rohit. You find here one Rohit. Next.
25th, sir.
25th.
30.
2, 3. That's it. 3 only.
Sir.
Check it.
3, sir.
Okay. Next to Rohit. Rohit's account. Rohit's account debit to sales 25,000. To sales again 10,000 on April 6th and 25th respectively. Okay, but you have given me only 3 transactions, but there are 4. So on 8th Rohit paid, cash came in. Okay, so cash account debit to Rohit we have written, right? Cash account debit to Rohit. Look at this. Cash account debit to Rohit 20,000. Cash account debit to Rohit 6,000. Buy cash 20,000 and buy cash again 6,000 on 8th and 30th respectively. Right? The total of debit side is 35,000, whereas the total of credit side is just 26,000. 26,000. Okay, and we take the highest total. The highest total is on the debit side. The same you bring here and drop here on the credit side also. Okay, there's a gap of 9,000 between the total of credit side and the debit side. Fill that gap. Okay, just put that balancing amount. It's called balancing figure. 9,000 is a balancing figure. Against that, write down, okay, by balance carried down. By balance carried down. And put the last day of the accounting period. And what was last day or what was closing last year will become opening. On first day of next accounting period, right here 9,000 and right against that to balance brought down 9,000. 9,000. That's it. That's the close end of the solution. That's the end of the solution, right? And I want you to, just for recap, if the debit side total is more than, this is what I have been telling, I think more than a dozen times I told you this, but still guys have a tendency to forget. So therefore it's written here that you should never forget. If the debit side total is more than the credit side total, write the difference on the credit side as by balance carried down. If the credit side total is more than the debit side total, write the difference on the credit side as to balance carried down. To balance carried down.